So guys, I think we're going to do a little bit of a chat. We want to talk a little bit about something that some of our clients have been impacted by in the last little while, which is, well, we're all impacted by insurance, but we've had a couple of claims that have needed to be made in the last little while. And as we continue to see weather events and things like major storms, windstorms, different things like that, we're seeing, in one of our condos, we had a tree fall on a townhouse. We've had basements flooding. We've had, all of these sorts of things that our property owners aren't really sure. Is it the right thing to make an insurance claim? We had a vehicle last Sunday drive into a house on one of our condos. And, the reality of that matter is that's clearly an insurance claim, but it isn't always clear. You don't always have the familiarity that you should with what's your deductible, what are you actually covered for. So just a couple of those types of things that we thought would be beneficial to talk about tonight, and hopefully we can spread the word a little bit to our client base as well, and even self-managers to help them understand, what does this really look like when it comes to insurance? What should you be paying? What kind of shopping can you do? Insurance is a very interesting industry because unlike most other industries, it has a very particular way in which it works, where more commonly you're dealing with a broker. That broker has access to a number of different insurance actual providers. However, often different brokers, they have access to the same providers. So the fact that I'm shopping insurance and I call broker 1 and broker 2 is irrelevant because they're both talking to the same 5 providers, for example, okay? And those providers will only provide one quote on one address. So if broker 1 asked for it first, broker 1's getting it first, this is the price. They're not going to give broker 2, they're going to say it's already been quoted. So it is very interesting because you really have to understand who you want to work with as a broker. You want somebody that you can trust, somebody that's knowledgeable, someone that has some experience in the industry. For me, what I look for in a broker is I look for someone who isn't going to make me feel like I need to read through every line of my policy myself, because I'm not going to. That's not my nature. So if I'm not going to do it, I guess I need somebody who will, otherwise nobody is. So when we're looking for a broker for our companies or our properties, we're always looking to really work with someone who we can be confident is going to be in a position that's going to be able to say, hey, I noticed you have this technology coverage, you don't need this. Or I noticed that you have this much rental coverage insurance and it's not enough. Or is it enough? Just to pose the question. So the person that we work with, we've worked with for over a decade now, I would say at least.
Yep.
And the reason that we stay with that person is because he gives that to me straight. Here are the things, here was last year's price, here's this year's price, here's the increase, here's what I think about the increase. This isn't worth shopping it, this is what we're seeing, or this is worth shopping it more extensively or whatever. And so that's kind of where it starts. It starts with the broker, right? Once you've established who you're using as a broker, they're going to be going to those insurance companies, but you really have to work out what do you actually need in coverage. They have their calculators that assist and provide, indicators to rebuild costs and things of that nature that you can't really have influence on necessarily. But then there's other types of coverage like rental loss or business loss. So in the case of rentals, if they're rental investment properties, considering rental loss specifically is really important because when we had an explosion in Wheatley at an 8 or 9 unit building, that property was vacant for 2 years?
Almost 2 years.
2 years it took to restore that property and for the municipality or township to allow us access back to that property to re-rent it again, which meant that that property owner had 2 years of rental loss.
In an apartment building.
In an apartment building.
That was up.
The owner's still on the hook for the mortgage?
Of course.
Of course.
He owns it. And for any other expenses, right? And there are still expenses. It's not zero, right?
Yeah, rental coverage.
So he did have rental coverage in that example, but how much rental coverage, right? And how long does that last? Versus how impactful is that rental coverage on your premium? So if you needed to ensure that you had enough rental coverage for a 2-year run, your premium probably would be unviable in the first place. Because the likelihood that that would happen is very low. It did happen, but your actual likelihood is not very high. So to pay an increased premium to ensure that extra peace of mind that perhaps maybe kind of if it happened and if it took this long, you'd have coverage may not be worth it. But as a property owner, you need to be prepared for that because it did take almost 2 years in that example. In another example, we've got in this particular case, a condominium corporation, but property nonetheless, where they have a very high deductible because they wanted to decrease their premium. The higher the deductible, the less likely you are to make a claim, so the lower your premium. So a lot of people are used to maybe their car insurance, a $500 deductible, or sometimes maybe it's a $1,000 deductible. In property, sometimes it's $1,000, sometimes it's $2,500, sometimes it's a bit more. You have to think to yourself, at what threshold would I make a claim versus would I not make a claim? Because we all know, when you make a claim, it's going to impact your future premiums too, right? So for $1,000, I'm not making a claim either way, which means having my deductible at $1,000 is worth it because I'm not making a claim either way. What about $2,500? I'm not making a claim for $2,500. So I might as well make my deductible $2,500 and take the benefit of the premium reduction that provides me. And then you just have to decide where your threshold is. In multifamily apartment buildings, my personal threshold is $5,000. If it's less than $5,000, I'm paying it because I am not going to take the hit to my premium for the next X number of years over something that's $2,000, $3,000, $4,000, $5,000. So our deductibles on our multifamily buildings are usually $5,000 because that's my tolerance level for the level that I'm willing to not make a claim and to pay out of pocket. And therefore, I will take all of the benefit in premium reduction provided to me by making my deductible $5,000. Why would I make my deductible $500 and pay extra premium for that if I'm never going to make a claim for $500 anyway? Right? But it's a very fine balance too, because this example I just gave you where they have a higher deductible, their deductible is $25,000 and a car ran into the building. They have to make a claim and they have to come up with $25,000 to pay their deductible. The claim is insurmountable for them not to make a claim on it. But $25,000 is frankly a little bit more out of reach than they had planned. But now they have to find a way to resolve that. So it's a very fine balance when it comes to premium and deductible, in my opinion. You need to really consider what is your personal tolerance level. Where are you at? Alan, if you say, I'm willing to spend up to $2,500 to never make a claim, but not more, then make your deductible $2,500. Because then you know $2,500 is within reach, it's within a comfort level for you. You're gonna make the claim either way if it's beyond that. So take all of the benefit available to you to reduce your premium in exchange for a $2,500 deductible. But if that number's $4,000, then make it $4,000. But don't make it $30,000 so that making a claim is out of reach. But now it helps your premium a lot. Well, short-term gain, but then what's really the purpose of the insurance if you can never really use it because the deductible's unaffordable, right? So it's a really interesting thing that you have to consider. And a lot of people don't. They often take whatever status quo is, often $1,000, sometimes $2,500, depends on the size of the policy. That's the standard deductible. So I often ask the question, what is my benefit to my premium if I increase my deductible? Because if the benefit is also $6, then maybe I'm happy to have the extra coverage and not have to have the option later if something should happen. But to find out that you've got potentially a couple $1,000s of benefit or hundreds and hundreds of dollars of benefit on your premium, when you know you're not going to make a claim either way because you don't want to kill your future premiums, then it probably makes sense to be adjusting that deductible, right? Then it comes to, when should I actually make a claim? A lot of people kind of are of two schools of thought. Either something happened, I'm calling my insurance provider right away and I'm making a claim, or you could kill me before I'd make a claim. There's no way that I'm gonna let my premium go up and pay more to my insurance provider over time. I'm not doing it. But really the answer is some measure in between. You really have to look circumstance to circumstance. What's the totality of the cost? Because I think that it is also well known that when you do make an insurance claim, the cost of the repair is often in excess of what you could probably get it done for yourself. And typically that's for a variety of reasons. Often these companies who provide workmanship for insurance companies have to carry a higher level of their own insurance and their own liability mixed with a myriad of other reasons. So if I hired a restoration company, which is the most likely outcome, if you make an insurance claim, they're gonna bring a restoration company in like Parker DKI, Alpine we use quite a bit, Belfour, these types of restoration companies. you're going to have something that's going to result in a higher cost than if I had the Marda maintenance techs fix it, let's say. But again, it depends what it is. It might be out of reach for my maintenance techs. It might be out of their scope, right? So you really have to consider that, because the other thing that's available to you when you do make a claim is you can also take a cash payout and then do it yourself. The interesting thing is the cash payout is often like substantially less than what they'll cover if they pay for it directly. So you have to weigh all of these factors in deciding, should I make a claim? Is it strategic for me to make a claim? Is it beneficial for me to make a claim? Is there a different, maybe I don't have a choice. Maybe I don't have the money, so either way I've got to make a claim, right? And frankly, we have insurance for a reason, right? But there's a lot of factors at play. I'll give you an example. We had a catastrophic event a few years ago that entailed a fire in a 2-bedroom apartment where a gentleman died in this fire, okay? Of course, the property owner made an insurance claim, and when the owner made that insurance claim, he was presented with a couple of different options. There was a lot of fire damage. There was a good amount of restoration that had to happen. A restoration company came in, and if I may recall off the top of my head, it was about a $120,000 quote to do the restoration, or the owner could take a cash payout for $80,000.
Yep.
Okay. So maybe the owner can do it for cheaper, but is it worth doing it yourself if you've got to take 3/4 of the money instead of just having them manage it, having them do it, etc. Having the timeline. That's the other thing, is often your rental loss coverage will kick in during the time that they renovate, right? If you take the cash buyout, it's up to you how long it takes. It could take 3 weeks or 3 months or 3 years. The insurance company doesn't care anymore that much because you're done. Your claim's closed. Okay? So you really have to consider all these factors. Now, if that owner had priced out that project and he could do it for $50,000 himself at a standard he was comfortable with, in a timeline he was comfortable with, then maybe taking the cash payout for $50,000 would have been strategic, or for $80,000 would have been strategic, because it was only going to cost him $50,000. And then irrelevant that they were going to pay $120,000 if they did it. But you can't get emotional about it, and we all do that. We all get emotional, right? Why would I take $80,000 if you're going to pay $120,000? Well, maybe that's because it's most strategic for you. I don't know. So you really have to look at your options and decide, when we're in our vehicle and someone rear ends us, or we rear end somebody, it's happened to all of us or to somebody we know, the first thing you think is, should I go through insurance? Right? So first question you ask yourself is, does it make sense to go through insurance? How much damage is there? What's my deductible? Is this person going to be accepting if I ask them not to go through insurance? Those are all the things you think of right away, right? But at your rental property, people don't often go through that line of thinking, but they should. What's my deductible? What's my rental loss coverage? Because if you find out that you have no rental loss coverage, that may factor into your decision. Maybe it's more beneficial to take the cash payout because you're not covered either way for your rental loss. So it's just the same premise as business loss, right? Something happens, you can't conduct your business anymore. The insurance, that component of your policy will kick in so that you are paid what your revenue or what your income would have been, because again, you still have bills to pay, right? I'd say we probably have maybe an insurance claim a quarter at Marda, I'm just guessing. So, we've got a lot of property, but that's not none. And we probably have close to as many of that that choose not to make a claim. Because it doesn't make sense. You have a flood in your basement, doesn't mean you're going to make an insurance claim, right? Anwar just had some trouble at her property, unfortunately, right? But every time you have to decide, is this strategic for me to make a claim? Remember, your insurance is there for a reason. I'm not dissuading you from using it. But you have to consider all of the key factors to determine whether or not it's beneficial. And when you're setting up that policy on the front end, you need to understand what kind of coverage do you really need. Because first of all, nobody likes paying insurance premiums either way. But let me just tell you, it's a real bugger when you pay your insurance premium and then find out you don't have the coverage you actually needed, right? Or that you're paying for coverage you never needed in the first place, right? And if you don't have that knowledge and you don't have that expertise, which many of us frankly don't, you want to make sure that you have a broker you can count on who will be able to provide that for you, right? I want my broker to tell me, I don't think this is enough rebuild cost. I don't think this is, enough rental insurance. I mean, rents are going through the roof. So the rental coverage that I had 5 years ago, it does not cover anymore. It's only 3/4 of the rent now. Great on the rental rate side, but that means it's no longer sufficient. If you don't have a broker that's actively pursuing those considerations, and hey, it's up to you. You can be like, you know what? I'm comfortable with 3/4 of my rent being covered. Okay. But you want to understand the implication on the premium. And if you have a good broker, he or she will tell you, this is going to cost you an extra $36. This is going to save you $108. This is going to cost you $92. Then you can decide in a more informed fashion, do I want to pay an extra $500 a month so that I can get 100% of my rent instead of 3/4 if something happened? Probably not. But do I want to pay an extra 20? Maybe. Right? So understanding those dynamics is what's going to really help embody the understanding that you need when it comes to whether or not you should make a claim and what you really need in terms of coverage. Insurance is the hardest thing to shop because, like I just explained, you've got brokers who are going to the same providers. So it can be very challenging when you're looking to shop it, but there are lots of companies out there. It's not as though there are, every broker doesn't cover every company. You just have to have an understanding. So if you're working with broker one and they have, let's say, Gore, Aviva, Wawanesa, Kent and Essex, those are the only 4 companies they deal with. If you're shopping brokers, you need to find someone that goes to different companies, right? And can get access to Gore and whoever else, right? Because they can't get access to the same. They're not going to be able to do anything for you on price, okay? But I have found that strategically, some brokers are a lot more proactive than others, and you have to just tell them what you need from them. Sometimes they're not providing it, but not because they can't, because they don't know what you need, right? Remember, a lot of people get 1 or 2 insurance policies, period. Their house and their car, that's it. Or if they're renters, their content in their car, that's it. Those are very retail clients. But when you're buying insurance at some level of volume, especially if you have a growing portfolio, you need to tell them what you need. I tell my broker, I want to see last year's policy, this year's policy, what my increase is, and any recommendations that you have. Other than that, I don't care. I don't want to spend any time on anything else unless you have an item of concern. I want to hear it. Either way, higher or lower. But outside of that, I'm not going to read every line. It's just not going to happen. And of course, when you're working in volume, especially if you do have a growing portfolio, you can sometimes also negotiate the commission that the broker brings in. In multifamily property, 15 to 20% is broker commission. 15 to 20%. If you are approaching on a bulk basis, at least sometimes you can get closer to the low end of the pendulum, depending on the type of policy, sometimes a bit lower than that, but most commonly in the type of policies we're dealing with in our industry, 15 to 20%. But you got to work with your broker. If you make things difficult on your broker and you're asking about every single line item in your policy every single time, then they have more work to do and they can't cut you a break on their commission. Or they're not going to, right? They're not going to. So I think that as we continue to see forms of natural disaster, forms of different things happening, especially here in the Windsor-Essex region, we're seeing more flooding, we're seeing more storms. You really want to understand what kind of coverage do you need, who do you want to work with to get that need, and when do you actually want to use it? Because it's not every single time. You don't want to use it just because something happens. I mean, a tree falls on your house, sure, yeah, of course, make a claim. A car runs into your front door, make a claim. I've used a few examples today. We had a fire where someone died. Yeah, that's a claim, I get it. But there are other cases where we have property owners who are like, my basement flooded and I need a new hot water tank. Maybe I should make an insurance claim. And it's like, probably not. You probably should not make an insurance claim. And then there's lots of riders you can get on these policies too. If you have a multifamily property, you can get a boiler rider, which is really interesting. And it provides some coverage depending what happens to your boiler. Again, assuming that you maintain proper preventative maintenance on the boiler or it will void your rider. But those are things that you can consider if you're in the space of multifamily apartment buildings and stuff like that. Because again, you just have to decide, and some of it comes down to what kind of owner are you, right? If you're an owner that's a little bit more risk averse, you want to have a little bit more peace of mind. The idea of having one eyeball open for 1 minute overnight about your property will never be acceptable to you. You probably want more insurance than less, right? And you're probably willing to pay for it. If you're somebody that is a little bit more open to risk, somebody who understands, maybe you're willing to bring your deductible up a little bit to save a little bit on premium, you're a little bit more of a robust landlord who's, probably growing their portfolio a little bit more flexible on the investment side, then, you might be a little bit more willing to have a lower premium. We're all willing to have a lower premium, a little bit of a higher deductible, excuse me. You're probably willing to do some of those things that can influence whether or not you're going to make a claim, and you're probably more likely to debate whether it's strategic to make a claim in the first place. Right? If you're really risk averse and you're very nervous about property ownership, or you've had a bad experience. If you've had to have an insurance claim and it didn't go very well, you're going to be certainly more sensitive to that, right? We had a property owner who owned a property for 1 week and the whole property burned down to the ground. 1 week to the ground.
Before he had signed his insurance documents.
Before he paid for it, but
Before he paid.
He was still covered.
He was bound. The bank wouldn't let it close without it.
Right? So if he ever decides to buy another investment property, and I'm not saying he will, but if he does, do you think he's not going to be influenced by that experience? Of course. Of course he is. So some of it has to do with those things. We've had claims before, like on the smaller end of claims that we've made. We had a circumstance at one of our multifamily properties last year where the neighboring property was an open lot, and beside that was a business, and the business had some skids on the property, and a passerby lit a skid on fire. The skid was close to our building caught fire, the siding caught fire, ended up, $10,000. Yep, ended up about $10,000 in damage. We had siding, we had windows, we had some interior smoke damage. I think there was a car or two in the parking lot that ended up being damaged, which obviously went through the insurance of those vehicles. But that's an example where I was like, should we make a claim? I don't know. To be honest with you, I wasn't sure. Because in the end, it cost us $10,000, not cost us, it was a $10,000 claim. Our deductible's $5,000, because that's what our deductible is in all multifamily. So pay $5,000, get $5,000. Could we have done it for less than $10,000 if we did it all ourselves? Probably. How much less? Depends. Could we have done it for $7,000? If we could do it for $7,000, was the $2,000 in benefit worth the premium increase because we have a claim? Maybe not. Could we have done it for $6,000? Definitely not that. Could we have done it for $5,500? So it really is a contemplation. And for us, when we have a claim to be made, because it does happen when you have multiple properties, we look at every facet. Everything I just talked about, plus what else is going on in our portfolio, right? Do we have the time, energy, resources, funds to self-manage the project, to find the right contractors, to deal with it? In this particular case, it was literally the main entrance of the building. I was like, just take care of this, please, because every single tenant is freaking every time they walk in the building right now because it's full of smoke damage. So we said, you know what, let's make the claim. But you have to look at all of those factors because that's not a guarantee. It's not an easy, definitely just make a claim. It's like, here I am a year later and I'm still like, maybe I could have gone the other way, right? So you really have to think about that. And remember that when you do have someone in the industry, like a property management provider, if you use Marda or another property manager, talk to them because they see this all the time. I just told you we have 4 or 5 a year of varying degrees. I've just given you many examples, probably all from the last year and a half, that we've experienced. Flood, fire, tree on a house, explosion, car into a building. So making sure that you're really working with the people you have as boots on the ground at your property is going to be key because they're also the ones. You have to understand what resources do they have. If I tell a property owner, we can legitimately take care of this for you and it's going to be cheaper, that's very different than me saying, I'd make a claim if I were you. You want that input, right? Because you need boots on the ground. Chances are you're not the guy, probably. You're not the man or the woman that's doing all the things, probably. Most of our investors are from out of the city, not all, but a lot of. So you're probably not the one meeting the contractor and determining if they're on time and dealing with the tenant who's complaining about the smoke damage. It's probably your property manager or whoever your rep is in the field or boots on the ground. So contemplating that too. And by the way, if that is you, it may also influence whether you're willing to put up with that hassle. It may influence whether you choose to make a claim. Your property manager or boots on the ground person might charge a project management fee. We charge project management fees, absolutely, because we have to go through all that hassle. We have to make sure it's done to a level that we're comfortable with. We have to meet the contractor, provide the keys, deal with the tenants, smooth them over, give access, and all the other things that come with it, right? So you really have to consider that. If you're gonna pay your property manager 8%, by the way, that's often included in your policy, but not always. So you wanna understand that. If I have something catastrophic happen to my property and I have to make a claim, my contract with my property manager says I will pay them a project management fee. Is that covered by my policy? I'd say 60-40, maybe 60% yes, maybe 40% no. Because remember, it doesn't devoid you of your contractual obligation to pay the project management fee. It just means it's not covered for you. So that's now an out-of-pocket expense in addition to your deductible potentially, because somebody's got to manage that for you, unless you're going to do it, which you may, but in most cases not. In most cases, you're not here locally or you don't want to do it or don't have time. So these are all factors to consider when you're talking about insurance and dealing with insurance. So I just really encourage you to think diligently about what's my policy cover, what kind of premium am I paying, what's included in the policy, who am I working with as a broker, what is my tolerance for deductible, and when do I actually want to make a claim? Or do I actually want to make a claim? Because the answer isn't always yes. But the answer is not always no either. So understanding the dynamics and leaning on people who have more experience than you. If you don't know, if you've never made an insurance claim, call somebody who has. Call a fellow investor. A lot of us are in different kinds of investment groups, real estate groups. Ask your property manager. Hey, have you ever had a claim like this? What did they do? How did it turn out? What should I do? A lot of times we have property owners who don't even understand their own policy. They'll put us right in touch directly with their broker and be like, please, because I have no idea what I'm covered for or what's going on here. And most of the time your property manager will do that for you. So use that to your benefit if you're in the situation where you do have to make a claim or have to consider making a claim. Okay? Anybody have any questions?
I just think, it's so interesting what you said, because I think that's always the problem, is that you don't know what you don't know.
Sure.
And so, I remember doing my homeowner's insurance.
Sure.
And somebody had said, oh, my son wears hearing aids, and they had said, oh, is that covered on you just put it through your homeowners? And I'm like, I don't know if that's covered. Turns out, no, it wasn't. You have to tell them. And
It's like a rider, yeah.
Same thing with the dog. You have to actually tell them you have a dog if you ever want to be covered under a dog.
So interestingly, that's also true for things like laptops and jewelry.
Yeah.
Those things are not covered just because they're in your home or could be in your home.
Yeah.
Doesn't mean they're covered.
Yeah.
But if they are covered and your laptop gets stolen out of your car, you can make a claim on your homeowner's insurance.
Yeah. It's one of those.
It's understanding
cases
those
where
dynamics.
This is so much more complex, and it's so true. And I learned this through the explosion claim, probably more than any, because his building actually wasn't damaged by the explosion, despite being within a block of it. His damages came from the fact that because it was so close, we could not go into that unit. We couldn't go into the units. So all of those fridges sat there for a year rotting. A hot water tank leaked, and of course there's no utilities on for that entire year and a half. And so the hot water tank leaked, mold covered everything. So that's actually what it, so right away he had an insurance claim, but at first it was just for missing rent at the point, because there was no damage to the building. But then that's when all
damage was incurred.
It's like, well, that's covered, but that's not covered, and that's covered, but that wasn't covered. And so it was really interesting. It's like, geez, you really do. So this goes to speak, you don't know what you don't know, so I think it's important to really have somebody who is in the know and that you're comfortable, really understands the dynamics of what a rental income is about.
And there's no question that that property owner has paid dearly in spite of having lots of insurance coverage.
Yeah.
Lots of stuff was covered, but there was stuff that wasn't.
Our project management wasn't. It was
Project management fee not covered, and it's expensive because there was a lot of work to do over a long period of time. So it's really important to at least understand your risk factor, understand your risk tolerance, understand that you have to contemplate these things if they do arise. It's no given stream or avenue that's clear or concise every time,
So why isn't the project management covered? Did he not go with the insurance restoration company? He said, I'll fix it myself, give me the cash?
Oh, they did go with the insurance restoration company, but one of the components in his policy did not include coverage of project management.
Well, if they hire a restoration company, you still have to manage it?
Oh, for sure, you do.
Because here's the thing, You still have to give them access. You still have to give tenants notice, depending on the type of claim. You still have to check for deficiencies. You still have to hold them to their timelines. Somebody has to inspect when they say, we're done. Well, says who? Is it a good job? I don't know. Like, depends, right? They're a contractor like anybody else, but they are a restoration company, so they do specialize in certain types of work.
They disappear.
Unfortunately, we did have one case of a disappearing restoration company, but that's not that common in fairness.
No, but I mean, like, they'll disappear from your project.
Yeah.
You're not pushing them along.
Just like
Like,
any-
I was.
Just like any-
Yeah, just like any contract.
I had to manage those claims.
Yeah.
So to the point
a lot
where
of
we actually assign, when we have a disaster claim, we'll say, Dale, I'm dealing with a fire right now, so Dale, you're up on this tree, like Dale had to do a tree through the roof. And I think, would that take you 8 months before you finally settle that?
Yep.
And it's just keeping, because you gotta deal with the broker, you gotta deal with that's what we're doing.
And
So-
remember, sometimes you're advocating to the insurance company on behalf of a client, or as the client you're advocating,
Yeah.
right? Because sometimes, depending on the interpretation of the policy, depending on the broker, depending on the contact person, depending on what else is going on, you have to make sure that you're getting everything covered that you're entitled to have covered,
That's right.
right? So there is a certain level of advocacy that has to happen to the insurance company, and often that falls to us as the property manager, or it falls to you as the owner, you know?
There are decisions in every project, any project that you ever do, insurance or not, where going down one path is in the best interest of the contractor and a slightly different path is in the best interest of the client. And you just need to push to make sure that when you get to those decisions, you make the decision that's in the best interest of the client, right? Like,
But somebody has to be there to
does
advocate for that.
Does the stove really need to go back exactly where it was because it was ridiculous before, and you're redoing the whole kitchen? Can we not move the stove over here? Well, that's not the way that it was. I know, but like, what's it cost to put it here instead?
ACs, I did a claim, someone polluted
Sure.
my ACs, and
Yes.
I had a bylaw officer give me a warning. I didn't move for a year, so I'm like, hey, can we move them up out of the way so this doesn't happen again? Like,
Right.
Is insurance gonna keep paying for my ACs?
So it's stuff like that.
But
right?
if nobody's doing that, or nobody's advocating for those things, but if someone is, then who's paying for that time? So, you know what I mean? Like, you want somebody in your corner. You want somebody that's saying, hey, this is not strategic, this makes no sense. We had one case, I think it was that fire that I was talking about, where they wanted to put like a linoleum flooring in
Yep.
it. And we were like, but
Like peel and stick.
this is, first of all, ugly as hell.
This is a $120,000 renovation. We're going to put peel and stick tile. That's what was here before from 1940.
That's what was there before. That's what was there
Like,
before.
you're not even going to be able to find
I was
that.
gonna say, is that existing?
But if nobody's advocating for you,
And then what do they say? No, we're not covering it because that's not how it was. You gotta pay out.
No, we got them to move a little. Like I didn't get them to put in what I wanted, but I managed to avoid them putting in peel and stick laminate.
That's another component of knowing what you have on the front end. Do you have replacement only? Or do you have current market?
and some policies actually indicate that if you make a claim, the insurance will cover to bring you up to today's code.
That's right.
So, in an apartment fire, there was no properly ventilated range hood, but that is today's code. We made a claim, they put it in. It wasn't there before.
That's right. That's the same one. Like they weren't going to do it, but I'm like, but that's code now, and that's what the policy says. So
You have to put it in.
let's move the stove here like I want because you can vent right out there.
What about like trees falling? Is that a standard thing for natural disaster, or like you better double check that you have that
There's coverage for that, pretty standard, yeah.
pretty standard?
Yep.
That seems to be a common thing.
It's not, most things you're covered for. The question is the details of each claim. So a tree falls on your house, you don't need to look if you're covered for a tree to fall on your house. You're covered.
You're looking to see if trees are excluded because you're in a rainforest, and they
Or
Fine print, right?
Or is there a project management fee that's going to be covered for managing the project of that tree falling on that house? Because let me tell you, it's a lot more work to manage than you think when a tree falls on a house. That's maybe not covered by your
I wouldn't
policy.
have even thought that you have to allocate a separate person or fee.
100%.
Either you or them. It's
Somebody's-
you or us, right?
Or you can do it yourself.
you can do it yourself.
Sure, you can do it yourself. You're here in Windsor, maybe you do it yourself. So I'm not suggesting you have to pay to have it done, but somebody's got to do it. If you don't, you can just wait and hope. And your claim will still happen.
Yeah.
The tree's gonna come off the house. Are you gonna listen to the tenant 300 times between now and then? Because the company that's removing the tree has 8 other trees to deal with first?
Right.
Maybe. What's gonna happen once the tree gets removed and now they have to tarp the roof because they can't get in there to do this because it's winter and it's icy and da-da-da. Like, there's a lot of coordination that has to happen that falls outside the parameters of just the claim. And people don't realize that, just like yourself. So people are like, what? Trust me, if you didn't have us there, it would be unfortunate.
Now your tenant's paying the heat, but they've got a tarp for a roof. That's not.
And now they're screaming. Who are they screaming at? The insurance guy? No. You or me, right? And then we're going to advocate to the insurance company on your behalf that heat should be covered by the claim.
Yeah. You chose to tarp it.
You chose to tarp it.
It's part of the expense process.
But someone has to advocate for that. The insurance company is going to be like, oh, let us also pay your heating bills. Sometimes you have to push harder than others. How hard are you going to push over $300 versus how hard are you going to have to push over $3,000? And it kind of depends on the contractor too. If you end up going with a full claim where you're actually using a restoration company, like we work with Alpine Construction quite often, for example, they may be a lot more willing to say, oh, that makes sense to move this 3 feet that way. They don't need to live or die on this one thing. And you got to work with them too. There are other things that we're like, you know what? This is going to cost you to put this back. I don't need that back. You know, there was a milk chute there. I don't need the milk chute. But that is part of restoring to what it was. So that they're going to save costs framing a milk chute you don't need.
Right.
Can we spend those couple bucks, please, on venting this outside or whatever? Right? But they don't have to do that. They only have to put your milk chute back. Right? So if you don't have someone working with them and advocating and saying, hey, can we do this instead of this? Can we do that instead of that? Can we whatever? Then you'll just get exactly the product you have. And it's awfully unfortunate to pay a $5,000 deductible and make a $150,000 claim and have a milk chute.
Right.
That's brand new.
So usually they send
You don't know what you don't know.
an adjudicator, right?
Mm-hmm.
Yeah.
Or
An adjuster.
Adjuster. So when they send the adjuster, is that really the decision maker? Do you have to advocate to him, or do you
Yes.
bypass him and go
You
straight
do.
to the company?
You're dealing very directly with the adjuster and also with the contractor.
Like
So if
the
it's just
main
something
product.
as small as a milk chute for a vent, then you're probably not going to involve the adjuster, because the adjuster is going to be less flexible in most cases than the contractor. But the adjuster is also open to reason, like especially if it, in his mind, it's going to be cost neutral or save him a couple of bucks, then
Then why wouldn't they do it?
then the adjuster will play ball. I think the adjusters, in my experience, are most willing to be helpful when someone is looking after the people. Because the insurance claim is about the asset, right? And there's no part of the insurance claim process that's really about actually dealing with the people. Like even if they've got rent replacement coverage and someone can go live somewhere else, even if all that exists, it's no one's job in that process to actually deal with the angry tenant. Like nobody has that
Says,
job
hey,
in
I'm
that
heating
process.
through a tarp.
And so if you're looking after that part really well, then your adjuster will.
Tends to
I mean,
often
they're not gonna give you granite countertops when you should have Formica. Like that's not gonna happen.
It's not in the realm of a viability.
But if you had quartz before, now you want granite for some reason, and they're basically the same price, then he might be okay with that. Right? So I think the two things that I wanted to add is if you have a single family home, I think the single biggest risk is that you have the wrong kind of insurance altogether. And you're paying for insurance, it's inexpensive, and then you go to make a claim and you discover you are not allowed to have tenants under the insurance policy that you purchased.
You're supposed to be living there.
You're supposed to live in this house, and then they deny your claim entirely. So
It's happened.
so that's one thing that I think, especially owners of single-family homes will do. You can't get like that kind of coverage for an apartment building. Like no, they'll understand that you're not living in all 12 units. But that's one thing, and I think the other thing is if you or someone you know is managing themselves and they've got a disaster that's all of a sudden come upon them, and it's one of sort of the three big things that they're afraid to be a landlord to deal with, then give us a call. We'll walk you through how we can deal with just your insurance claim.
Yeah, because it can be intimidating. If you've never done it before, you've never dealt with it, you're not familiar, it can be intimidating for sure.
I don't think there's a moment when our clients appreciate the service more that we provide than when we make that initial call to say, look, there's been a fire in your house. Unfortunately, so-and-so has passed away in the fire, and I'm on site dealing with it for you. I got this.
100%. 100%.
Right?
And that's a lot of why you have property manager. Deal with the emergencies. 24/7 availability to be there when an emergency happens. That's part of what you're paying for. Peace of mind. You're not the 2 a.m. call because someone's deceased behind the door. You're not the after hours phone call or during hours phone call, frankly, that the tree went through the roof or the car went through the door or they hit a gas meter, and all of these things do happen. They're not as uncommon as you think, but that's what you're paying for. Availability to be there.
I think for 90 or 95% of Canadians, when a tree goes through their roof, they have no idea who to call. Like, how do you deal with that? They don't know. They know to call the insurance company and that's it. They don't know how they're going to go about actually restoring their house to where it was before. And that's where we can come in and at least have some experience with trees through roofs and cars through glass and fires and explosions.
All the things. Any other questions, guys?